Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And today we're going to talk about on the news of the IPO breakup of Alibaba. There's Cainao. It's coming out maybe by the end of this year already. I don't know if you saw that. We're going to talk about the news, talk about what sort of take Charlie Munger might have on this whole thing.
Oh boy.
Two Super Guys Trade Stocks.
I love it. So I don't know if you saw the headlines. Did you catch this going into Friday?
No, I was depressed looking at my shorts.
Yeah, understood. So basically, we had that news breaking that it looks like Alibaba may break up into 6 different units, and already like the first one is already talking to banks about getting financing for an IPO. Pretty wild, I thought.
I said that during our Baba video, and you're like, well, it's going to take a while. It's been 2 days. It was 2 days
Yeah,
after that.
yeah. Apparently, they didn't announce it until they had plans to move forward. So, China. It's basically the logistics arm. So, think of like the delivery and shipment kind of piece of Alibaba Corporation, if you will.
Got it.
Um, of which Alibaba owns 63% of them as of the most recent thing I could find. They've actually upped their stake a couple of times in this logistics arm. So it was like 47, and then it was 51, and now it's 63% as the most recent one I could find. So this is kind of the basic overview here from Wikipedia. The thing I laughed at the most actually was if you look at the lockers. Does that look a little bit familiar to you?
Yeah, that is directly like Amazon. Okay.
Yeah. I don't know which one did it first, but basically it doesn't matter. You don't have to truly innovate when you're bringing the product to, I guess, a new market. But 2013 they were founded, so they've been around for 10 years now, and they're looking to hopefully make their IPO. They very aggressive targets as far as delivery, trying to make delivery with everywhere within China within 24 hours, and then 72 hours internationally. So very, very aggressive, and we open up a whole world of kind of merchants and customers to Alibaba Group
72
themselves.
hours internationally is wild.
Yeah, yeah. I mean, it's aggressive. I don't know. I can't speak to what their accuracy rate is at, but it's kind of definitely a big unit within them. So this is from one of the articles here talking about how they already were talking to banks. Like I said, you have China International Capital Corporation and Citigroup. Or Dylan's favorite bank, I know, uh,
Screw that
being
bank.
prepared to do the IPO, and that they're targeting a $20 billion worth and hoping to do it before the end of this year.
End
What
of
do you
this
think?
year. Yeah, I mean, theoretically, on the news that Baba broke up into 6 pieces, I mean, this should give a bump to Baba, you would think, because it could IPO. As long as the IPO goes well, it doesn't tank, I guess, would be a problem.
Yeah. I mean, it's interesting. So I ran through some numbers here. This is their revenue year over year, right? Pretty stout growth here. 67% year over year. They're 24% year over year.
Yeah.
They're continuing the trend. I think it was 27% for the most recent quarter over year. So solid growth. But they are basically, when you look at them from so this is that most recent quarter, 27%. If you look at it from a standpoint of the growth within Alibaba Group itself, look at this. They are the fastest growing unit within Alibaba, right?
Yes. Jeez.
Sexy. Yeah. Yeah, they are by far and away growing the fastest. However, when you look at it on an EBITDA basis here, they're basically break even. So they're not really generating any actual positive earnings for the corporation at this point. So I wanted to look at kind of what other margin rates are for other logistics companies. So we kind of compare, and then we can look at the revenue growth in the future and see, what sort of valuation kind of makes sense to me. See if that $20
Okay.
billion number is completely garbage. So I found this website here that had basic margins for transportation and logistic companies. You're seeing around a 10%, trailing 12-month margin here for EBITDA, and same thing for the operating margin. So 10% margin is kind of what I went with for my numbers here.
Got it.
Yeah, I converted their most recent revenue to, from RMB to USD, just because I'm used to working with USD. So it's about $6.7 billion in the last 12 months in terms of revenue. Right?
And they're valued at 20 billion overall.
Yeah, that was the number overall as far as what the discussion was. Now, it depends on like that article is referencing a $20 billion valuation for the IPO. This is all preliminary stuff, right? If you even go back to when Alibaba increased their ownership stake, which I think was 2019 or somewhere around there, to that 63%. At the time, they were valuing them at $20 billion around there. So Not entirely sure, right? Same thing.
Okay.
We've had a big setback in Ant Group in terms of their valuation, that sort of thing. So I threw some numbers into kind of a projection here of valuation in terms of what I want to see revenue growth wise. So this is a very conservative thing. This would literally have them falling off a cliff in terms of their revenue growth, slowing down dramatically, which I'll be honest is extremely conservative. You're
Yeah,
talking about
especially which I would think it would be pretty high because I mean
yeah.
even after their 2021 jump, they still increased.
Yeah, I would agree. I would agree. I'm going to do another number right after this one that has a little bit more aggressive kind of growth. That's probably a little bit more in line, I would think. But I wanted to do something very basic and conservative here. So $6.7 billion in revenue grows all the way to 9.2 by 2028. So I did a 5-year kind of growth pattern for this. That if I then give them credit for eventually being able to achieve the 10% industry margin, right, which, like I said, right now they're basically break even, but the industry as a whole has about 10% margin. That'd be about $920 million in profit in about 5 years, right? Yeah, annually. And then if you look at the average kind of EV enterprise value to EBITDA ratio here globally for transportation companies, you're talking about a 15 or so, which is about a
Does
$14 billion enterprise value.
does China take a hit differently than other companies for that just because of like political relations or no?
It's a good question. I can't answer that one.
Okay.
It's a good question whether or not there is their EV to EBITDA ratio is drastically different from the rest of the globe. 15 is not exactly a very aggressive multiple. That's much more in line with something like large like a FedEx or UPS or
Got it.
these kind of very large companies that don't have anywhere near the growth rate that they do at Cainao. Right. So I did one a little bit more aggressive in terms of the actual revenue growth here. So I think it's still in the realm of reasonable though, right? 27% down to 25. So I'm having them stair step down a few percent per year. I end up with like a $16.6 billion in revenue by 2028. Once again, I'm giving them credit for something they haven't done yet. I'm saying that they can achieve this 10% industry average margin, 1.66 billion. Right? So now if I use the same EV to EBITDA ratio, industry average, about 15, it gives them a valuation of 25 billion. In reality, if a company is growing that fast, they're not going to get the industry average EV to EBITDA ratio. So it would be above that.
Right.
So overall, from a Alibaba shareholder perspective, I don't think this IPO is large enough to really move the needle for me. Because say we go public now at a $20 billion valuation and it's worth 25 or even $30 billion in 5 years, yeah, it's gone 50%, but that's still such a small portion of it. Adding that extra $10 billion of valuation compared to Alibaba's current market cap of like $250 billion is just a small drop in the pond, if you will.
Yeah, and I think on that last, you posted something on their financial highlights, and I think their total percentage of revenue was 7% of BABA, so it's not like a ton.
Yeah, yeah, exactly. And they are by far and away, like I said, the fastest growing unit within them, but I don't think it's going to dramatically move the needle in terms of Alibaba valuation overall. So from a Charlie Munger perspective, what do you think? You think you'd be excited about something like this?
If you had asked me before you showed me the numbers, I would have said yes, but now I'm going to say he won't care.
Yeah, yeah, that's kind of my inclination is that it probably won't really matter. But yeah, she'll be able to bring in some fresh capital. What are they going to do with the fresh capital, though? They're going to buy back more shares more aggressively. I would love to see that, but I don't know if that's actually going to happen because it seems like they're being kind of hamstrung by the CCP in terms of the amount of cash that they can deliver back to shareholders. So I don't know.
That's just what you want to hear when you have a huge investment in BABA. I don't know. I don't know what's going to happen. No boy.
Hey, I'm trying to be realistic. Just a stupid guy on the internet doing my best at my own stock, my own money that I'm trying to look out for.
Well, let us know what you guys think. Give us a like and subscribe, and if you think that this IPO is a good idea.
Yeah. Catch you the next.